SOFI Technologies, the financial services company, is scheduled to report quarterly financial results on October 29th, 2024. Many investors are asking if they should buy SOFI stock before the company announces those earnings or buy SOFI stock after the company announces their earnings. They're also asking if they should buy SOFI stock at all. I'll answer those questions here in this video. I'll also preview what investors can look for from SOFI when the company announces their earnings results, the big picture items that investors should look out for that might not be well publicized, right? Numbers like revenue and earnings per share and whether or not they beat expectations are usually widely publicized. But I'm going to share with you the critical metrics to look out for from the company's earnings update that are also important and to look for in the upcoming numbers. Let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so let me provide you an update on my recommendation for SOFI stock. All throughout 2024, I've had SOFI stock rated as a buy, and I last updated that recommendation on July 30th. I'll update that recommendation again after the company announces its earnings results. I won't be updating this official recommendation here so close to the company's earnings release. And so I've had the company rated as a buy, and now it's just a matter of should you buy before earnings or after earnings. Since I already answered the question that I do have the stock rated as a buy, I think it offers investors a solid risk versus return in the long run. All right, so management has forecasted third quarter revenue in the range of $625 to $645 million. Now, in the previous 2 quarters in 2024, the company beat its own forecast and upgraded the target for 2024. So far, this year has gone much better than SOFI was expecting. In addition to $635 million in revenue, they are forecasting $160 to $165 million in adjusted EBITDA and $40 to $45 million in net income with 4 cents of earnings per share. Now, SOFI stock only recently turned profitable on the bottom line, and management wants to continue the streak of being profitable on the bottom line consistently from here on out. Now, for the full year in 2024, they are forecasting revenue growth of 18% at the midpoint, and that's up from 16% at the midpoint previously. So, like I mentioned, this year has gone much better than SOFI was expecting. Now, this guidance assumes lending revenue will be at least 95% of 2023 levels versus prior guidance of 92 to 95% of 2023 levels. And I'll take a moment here to talk about how companies frame their numbers, right? And you'll notice here how SOFI is framing this number, 95% of 2023 revenue. So instead of saying that their lending revenue is going to fall by 5%, they're saying it's going to be 95% of 2023 revenue, right? That sounds much better than, our lending revenue is going to decline by 5%. Companies are very clever in the way they frame their financial results, and some really take it to the next level in how they frame these numbers to make them look so much nicer for investors when you're evaluating these numbers. They don't want you to think of things going poorly or going badly when they are talking about their numbers with investors. Now, this same management team or CEOs in general change the way they frame their numbers based on the people that they're talking to. And so I always caution investors to do your due diligence. Don't just take the word of management teams and what they say, because when management is talking to investors, their goal is just to increase the stock price. Their goal is to frame their company in a way that causes investors to pay a higher price for their stock. And so you got to be careful. You got to go through the numbers and come to your own conclusions and not listen or not take the numbers the way management wants you to take the numbers. So that being said, this is before they said that revenue was going to be 92 to 95% of 2023 levels. So this is an upgrade. This is an upgrade. Going into this year, management thought lending revenue was going to be much worse. They thought it was going to decline by 5 to 8%. Now they think at worst it's going to decrease by 5%. So instead of saying lending revenue is going to fall by 5 to 8%, now they're saying at the very worst it's going to fall by 5, which means it could be even better than that. It can be even better than a 5% decline. It could be flat. It could be up, right? So that was a nice upgrade from management there. And one of the reasons why management was forecasting a decrease in lending revenue was because of their own decision making. They wanted to be more prudent with lending. They didn't want to give out as many loans in 2024 because they were concerned about a recession. SOFI is sensitive to a recession. The primary lending portfolio, the primary product in their lending portfolio is personal loans, which are very sensitive to economic cycles. If you have all different types of loans, your personal loan is the one that you're most likely to default on. Because if you default on your car loan, they will come and repossess your car. If you default on your home mortgage, they'll come and foreclose on your home. But if you default on your personal loan, the repercussions are not as serious as the other two I mentioned earlier. So that's why when you lose your job or when you get a pay cut, personal loans are at risk the most. And so that's why SOFI wanted to be more prudent in 2024. However, as the year has progressed, we've come to realize that the chances of a recession are much, much smaller than we thought. We, in the US at least, seem to have avoided the worst negative impacts from those huge interest rate increases from the Federal Reserve in late 2022 and early 2023 to fight inflation. It looks like they've fought back inflation. Inflation is coming down, and now they've started to lower interest rates, which could mean that we've avoided the recession. Now, there's still a small probability of recession, but that probability of recession has decreased significantly. And so that's great news for SOFI and SOFI stock investors. Now, for the full year, they expect to deliver profitability adjusted EBITDA of $610 million. That was also up from their previous guidance of $600 million. And so all of their forecasts have been adjusted upward because of how well the year has progressed for SOFI, much better than they were expecting. Now, if you watched my video when I did a discounted cash flow analysis of SOFI stock to determine its intrinsic value, I came to the conclusion that its intrinsic value should be a little above $21 per share. I have it here. Now, I did this as of October 7th. So this is a couple of weeks old now, and $21.38 was much higher than where the stock was trading at the time. Right now, SOFI stock has increased significantly to $11 per share, and that's up from around $7.50 per share earlier in October, and the stock is up now year to date in 2024. SOFI stock is now trading at a forward price to earnings of 47, which is the most expensive it's traded for according to this valuation metric. Still, overall, I think SOFI stock is undervalued. However, if you're trying to decide whether or not you should buy before or after earnings, I don't think the undervaluation is large enough to justify going in ahead of earnings and taking the extra risk of the downside following the earnings release. So even though I think the stock is undervalued, I think it would be more prudent to wait until after earnings to buy the stock. That way, sure, you might have to pay a higher price if you're interested in buying the stock, but you're also getting the stock at a lower risk point in time with all of the information out and digested, and that way you get lower risk for a higher price. I don't mind paying a higher price for a stock if I'm getting lower risk. Remember, it's all about risk versus return. If you can get lower risk, you're willing to take lower return. If you're going to take higher risk, you've got to be expecting a higher return. And so for those reasons, that's why I'm making this recommendation for SoFi stock. Did you know that over 90% of the people that watch my channel are not subscribed? It'll really help support my channel if you hit that subscribe button. And oh, by the way, one of the benefits of being subscribed is that I take requests from subscribers more often than I do from non-subscribers. So if you prefer that benefit, please subscribe to the channel.